Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. Today we have Alasdair Macleod and Jayant Bhandari. Alasdair is head of research for Gold Money and an Austrian economist. He has a background as a stockbroker, banker, and fund manager. Jayant is constantly traveling the world to look for investment opportunities, particularly in the natural resource sector. He advises institutional investors about his finds. Earlier, he worked for 6 years with U.S. Global Investors in San Antonio, Texas, a boutique natural resource investment firm, and 1 year for Casey Research. Welcome, gentlemen.
Thank you very much, Richard.
Great. I thought we would kick off the discussion with some of your recent writings, Alasdair, in terms of the drift, as you see it, into fascism from what's happening in the global economic environment. Could you elaborate on that?
Well, yes. I mean, we've seen a very nasty example of it in India, which I'm sure Jayant will tell us more about. But the authorities basically are taking more and more control over our day-to-day lives. And in this country, anyway, virtually every town, every city is covered with cameras. They can follow you literally everywhere you go. Okay. You've now got the electronic means of seeing, where people travel because of automatic ticketing and all this sort of stuff. Yeah. And I tease my socialist friends, of which I do actually have some. Okay. I say that since the Labour Party gave up Clause 4, which in the Labour Party constitution was the desire, if you like, or the objective to take into public ownership the means of production. In other words, it was a communist approach. I tell them you've adopted the means of the fascists, which basically allows people to own their own property, but the state tells them what to do with it. So their sense of humour gets a bit strained when I tell them that, particularly when I tell it again and again and again. So, I mean, that's why I wrote the article in a sense, because I think everyone's going that way, and it's not just in the, if you like, in the advanced Western nations. It's also all around Asia. I mean, recently I've been traveling to places like, Dubai and Malaysia and Jakarta as well. And I see the same thing everywhere. The central banks basically want to do away with cash. And part of this is that they're looking forward to the financial technology revolution, mobile technology, as a means of replacing cash for payments. It's just that India jumped the gun a bit on it. Quite why, I don't know. We might find out a little more. Jayant, well, I'm sure will know a lot more about that than I do. But it does seem to me that is clearly the direction in which we're drifting. And it's interesting that we've had a sort of mini rebellion with Brexit, and we've had a mini rebellion. I call it a mini rebellion because it's not quite the same subject, but it's all associated with the same subject. A mini rebellion with the election of Donald Trump. So I think the authorities, I think, are going to have difficulties pushing through their plans, but there's no doubt about it, in my view, that there is this plan to move towards what essentially was a fascist superstate, which is what we tried to get rid of successfully in World War II when Hitler tried it.
And you mentioned in the writings that the governments do not see the risk of statist domination because it comes not from private individuals but from the states themselves. And then you go on to observe that banning cash will almost certainly speed up the decline of an electronic currency's purchasing power. Do you see that happening in India?
Well, India is, I think, a fascinating situation. I mean, I'm not an expert on India at all, but my observation is that if you do away with cash, then effectively which essentially is what Modi has done. Because if you include, the forged 500 and 1,000 notes, we're looking at 90% of circulating cash has basically been eliminated at a stroke, and the effect of that, I think, is that people will trust the rupee less than if Modi had not done that. Right. And I think, to an extent, this is reflected in reports, if you like, of unofficial prices for gold, showing huge great premiums, which, of course, clashes with official reports, the poor jewelers and processors and all the rest of it who have to buy their gold through the market, and then they have to charge a 10% VAT on top, or purchase tax on top. They can't actually cover the purchase tax because they're passing it on, if you like, at wholesale prices. I mean, the whole thing is just a horrendous mess, I must say. But there we are. That's what's happened.
Jayant, can you provide us an update on what's happening in India on the ground in terms of this war on cash?
So, Richard, there continue to be problems with cash in the country, and that country simply cannot work without cash. The banks have taken all the banknotes back to the banking system, but they have not released the new banknotes to the citizens. This means that the economy has stagnated. Millions of small companies are failing. Hundreds of millions of people are losing their jobs, and the economy is in deep trouble in that country today. This country simply cannot work without cash. Remember, this is a country where about 1 billion people do not have internet connections. Half of the country does not have electricity connection. The people who do have connections find their connections unreliable. Banks are very unethical. My bank in India charges me 2 or 3 different things every month, and I have to fight with them to undo the unauthorized deductions they make to my account. Wow. Every person I know in the country suffers from the same problem. People do not trust the banking system. The transaction fees on any cashless transactions is very high. And on top of it, there is no electronic system. The logistics don't exist in that country. So the cashless approach will completely fail. But it will be very painful now because there's no cash in the system.
And what's happening in terms of the economy and the effect on the Indian rupee currency in terms of purchasing power, also inflation, deflation, are there any emerging trends, even albeit it's a bit early, but do you see any emerging trends?
Well, firstly, I see economy failing very badly in the country. IMF came out with a report yesterday saying that Indian economy, in their view, will slow down from 7.6% to 6.6% in terms of growth rate. I completely disagree with that. My eyes tell me that there is negative growth everywhere in the country. I have spent a lot of time traveling in the country. I have talked with a lot of businesses, and everyone is claiming that his business has fallen by anything between 20 to 80%. Now, that is a massive amount of negative economic growth. So I don't know where IMF gets its 6.6% from, but I guess they will revise it over the next few months. The second thing you asked me was about the deflation and inflation thing. Mm-hmm. So the situation with India today is that people are avoiding purchasing anything except what they truly need today. Now, what you normally need as a necessity on any given day is food and healthcare. Even there, hospitals are empty and people are not buying food. I don't even know what people are eating because farmers are having to dump their food supplies. They are discontinuing farming. Wow. And food prices are down anything between 25 to 75%, which is a huge gain for the middle class. But the reality is that if farmers go bankrupt, and if they don't farm for the next cycle, then you won't have food in a few months' time. So this is an extremely chaotic situation for the economy.
So it seems to be deflationary in the food prices, but will that trend hold? Like if we have the Indian rupee losing purchasing power relative to the US dollar and other currencies, wouldn't that at some point have the effect of making food prices go higher?
Oh, it will go higher anyway, as I said, because farmers won't be farming for the next cycle anymore, which means that in a few months' time, there will, in my view, be shortage of food and food prices will go up. The other thing is about the value of the Indian currency compared to the US dollar. Now, I go to Richard, China quite often, and I find China much cheaper than India is, which to me means, and I travel to a lot of poor countries, and I consistently find India to be among the more expensive among these poor countries, which to me means that rupee is overvalued. I think rupee will lose its value, and this will have an additional negative effect on the economy.
Yeah, and Alasdair, you mentioned in your writings that currency collapse could be the greatest threat to planned national socialism. Can you elaborate on that? Because that, as Jayant mentions, appears to be the potential outcome.
Yes, I'm very interested to hear what Jayant says, because it rather is in tune with my view on the whole thing. How on earth the IMF think that economic growth in India is going to be 6.6%? I mean, they must be mad. I think they're looking at an out-of-date model or something. Models don't work. It's as simple as that.
Yeah.
I mean, I'm fascinated to hear that business is down anything between 20 and 80%, depending who you talk to. That is immensely serious. And I would say on what Jayant's saying, that we could expect GDP to fall over the next year by a figure of roughly 1/3. I think that's quite possible. Now, that's a figure I've plucked out of the air, admittedly, but I'm trying to give, if you like, a sort of an economist's idea of the seriousness of this ridiculous situation that Modi has put his country in. And not only that, but when we look at the purchasing power of the rupee, again, I'm very interested that Jayant reckons that it is very overvalued on the basis of price differentials between India and other places in Asia. And that certainly would suggest to me that the rupee is going lower. We will certainly see food price inflation. We've got lots of examples through history where you get a mixture of monetary inflation, which will happen. I mean, at the moment we've got monetary deflation, obviously, but monetary inflation will follow, because the central bank will ensure that there is money available. It will be flooded into the market. The people down at the bottom of the chain won't get it. They will be impoverished, actually, by inflation, because inflation is a wealth transfer effect. And it's always the people at the bottom of the pile who suffer from inflation. The effect of that, I think, is that the Indian rupee is heading down and down and down. I can't see any way in which it is going to be saved. Now, I'd just like to make another point, and that is that in a cash economy, the rate at which a fiat currency loses its purchasing power is to a large extent governed by the availability of cash. Because as the cash loses purchasing power, you need more of it to buy the same amount of goods. So what happens, as we saw in Germany in 1920 to 1923, is that you have to produce an awful lot of currency in order to meet the demand that arises from the fact that its purchasing power is collapsing. So that, if you like, puts a brake on the rate at which the purchasing power of the rupee actually goes down in a cash economy. If you take, instead of a cash economy, and you make it a purely electronic money economy, which is broadly, I think, the way in which policy is intended, then what happens is that you can lose that purchasing power overnight because there is absolutely no brake at all on the availability of the money through a digital electronic currency system. So I think that's an important point. That's one of the points I was trying to make in my article. And so all I see out of this is a situation which was considerably worse than it could otherwise possibly be, just from that one action of banning those old notes. And I know it's officially, it's meant to be 86% of the notes in circulation. If you include the forgeries, I think we're looking at 90% of the money in circulation, the cash in circulation. I mean, this is so serious, and that just can't be emphasized enough.
Jayant, any comments?
Well, I completely agree with everything what Alasdair said. The economy is in a terrible shape. And remember, 50 to 80% of the people in that country work in the informal economy. They are outside the normal conventional organizations. And these are the people who are suffering the most. And the government doesn't really care about them because these are the people who earn $1, $2, or $3 a day. These are the people who are below the tax bracket anyway, and the government doesn't care because these people don't pay their taxes. These people, I don't know, and I think it's very likely that some kind of famine might set into India, and this is almost an indirect genocide on these poorest people of the country. And that is something that the world is not really understanding as yet. IMF is not understanding, the international media is not really paying much attention to this. You do need cash in a country like that, and they have taken away the cash from the hands of these people.
Gentlemen, both of you travel extensively, especially recently, to parts of South Asia, Southeast Asia, in the Middle East. Do you see other countries doing the same thing, or a move towards that in a similar way? Alasdair?
Yes, I do. I am pretty certain that is the direction of travel of all the central banks throughout Asia. The one way to look at it is that when we go to places like Kuala Lumpur or Jakarta or wherever it is, you have an economy. You immediately see that the economy is running on sort of two speeds. You've got the cities where you've got all the people that you have in a major city in the West. You've got the lawyers, you've got the businesses, the banks, the accountants, and all the rest of it. And they're the people who pay the taxes. They're the people who need the infrastructure. They need the roads. They need the airports. They need all the sort of communications. Then you have got the rest of the country, and a lot of it is actually in the cities as well. And that is, as Jayant says, it is the cash economy. It is the poor. It is the people who haven't changed the way they do their business, the way they run their lives, ever. They continue as per normal. And so even in a city like Kuala Lumpur, I could imagine that a good 1/3 of Kuala Lumpur is untaxed. I'm talking, because obviously, I mean, you've got, a few people who pay a lot of tax at the top, but you've got many people who don't pay tax. And of course, in the country, it is exactly the same. And in a place like Indonesia, you've got something like, I think it's 12,000 islands. I mean, it's a huge number of islands. The communications are very poor. People just use cash. They've got no other means, if you like, of paying for things. They do use gold, incidentally, but they use gold rather like they do in India, with using it as collateral, going to pawn shops and depositing it and then taking it out when times are a bit better. But what it means is that from the point of view of a central bank, they see this two-speed economy and they think, if we can just get the economy that's not recorded on the books, then our economic growth is going to appear to be considerably quicker than anybody expects. So if you look at Indonesia, I think, is about the 14th largest economy in the G20. If they manage to get their unrecorded economy on the books, as it were, recorded as GDP, then suddenly you're looking at a country that's probably moving up to the number 12 in the G20 from number 14. So you can see that from every point of view, this is the way the bureaucrats are moving. And the only good that's going to come out of India, as far as I can see, and I think it's desperate, and I think it is. I think genocide is a good word. The only good that's going to come out of it is it might just make the governments in other Asian countries and elsewhere just think a bit before they take similar actions.
And in your travels, Jayant?
Well, you see, Modi is going to make this whole of this cashless economy concept very embarrassed. He will make it very difficult for other countries to follow the same path because Indian experiment will fail completely. And I completely agree that the world over governments are moving towards cashless economies. And people also, it seems to me, a lot of people who don't really understand that this is making their societies fascist are keen on making their societies cashless. So yes, there is a move towards making their economies cashless, but Modi will have made it a bit difficult for the time being because he will have shown that cashless project does not work.
So this is interesting. If we look at what's happening in these countries, as you mentioned, there appears to be strong stagflationary forces, rising inflation because of all of these developments. But at the same time, if we now look at North America with President-elect Donald Trump to become president in 2 days from now, what do we see here? I mean, it would appear that the Trump policies of regarding trade may be stagflationary as well due to protectionism. At the same time, there's talks about large infrastructure spending. Canada also has announced an infrastructure bank of Canada for guarantees of $81 billion approximately, and the U.S. Is looking perhaps to spend $500 billion to $1 trillion, according to the Trump plan. So, gentlemen, do you see rising inflation, stagflation in North America contributing overall globally to that trend? Alasdair?
Yep. The answer to that is yes. The way I would look at it is in terms of where we are in the credit cycle. If you look at what's going on with bank lending, there is no doubt that bank lending has been expanding quite rapidly from the beginning of 2016. It is still running over trend. Now that tells me that the US economy is generally pretty healthy. I know that shops are closing and all the rest of it, but I think that's a shift in if you like, consumer patterns. A lot more consumption is done through the internet as opposed to in the high street. So I don't think we worry about what's happening on the high street with stores. But what we can see is that the bank credit, the rate of bank credit expansion is above trend, and therefore the economy is healthy. Now along comes President Trump, and he's going to inject a huge, great amount of reflation on top of an economy that is in the stage of the credit cycle where it is already expanding. Now that to me will rapidly lead to overheating. Furthermore, his intended expansion through infrastructure spending and also lower taxes comes at a time when China has been stockpiling raw materials, industrial raw materials, really so that it can discharge its 5-year plan. And its 5-year plan has two elements. The first is to make the Chinese economy, if you like, more technology-driven, more services-driven. The increase in the middle class population is likely to go up by something like 200 million by the end of 2018, maybe 2019. And as well as that, China intends to, if you like, develop the infrastructure, bring about an industrial revolution throughout Asia. And that's what the Silk Road projects are about. But it's not just the Silk Road, it's everything else. So what we can see is that China has, one way or the other, cornered an awful lot of industrial materials and energy in order to prosecute its plans. And now along comes Donald Trump, and he wants to do the same thing, not quite in such a scale, but you can see that the effect on commodity prices will be to drive them higher over a period of time, and quite a lot higher than anybody actually thinks is reasonable. So all in all, this is going to bring inflation pressures into the American consumer prices, and I see this happening elsewhere as well. And with accelerating consumer prices, then you've got a problem. How far can the Fed raise rates in order to take control, if you like, over price inflation? And I can tell you it's not very far. Under my estimation, I think a Fed funds rate of no more than 2.5% would be enough to topple the US economy, because it is so overburdened with debt and malinvestments.
Wow. And your thoughts, Jayant?
Well, so I am very optimistic about metals and gold and silver as a result of exactly what Alasdair talked about, because there will be a huge amount of investment happening in the US and China. And I have just been to China. China continues to be very aggressively stay on the development path. So these are very good signs for the future of the commodity prices. Now, I also think that if there's a possibility that Trump might be able to reduce regulations on the businesses, and if that actually happens, it will have a deflationary effect on the society. Now, I don't know whether that's possible or not, because bureaucracy has a life of its own, and politicians can't really make a huge difference to what bureaucracy wants to do. But certainly, as far as commodities are concerned, I think the future is very optimistic in terms of pricing.
Recently in China, there's been more of a trend in going towards Bitcoin versus gold. Is that a long-term trend? The Chinese government authorities have recently come down on Bitcoin, but there appears to be a perception of value based on its use as an international payment mechanism. But given that it's not backed by a commodity like gold or government, the full faith and credit of a government, where do you see the Bitcoin versus gold trends going, Alasdair?
I like your description of it's not backed by the full faith and credit. I don't know that that's worth much.
Yeah. Okay.
Okay. We'll gloss over that particular point.
Okay.
I don't follow Bitcoin that closely, but what I would observe is that the authorities don't like Bitcoin. We've seen America close down some components of the Bitcoin business, and I don't know whether they were justified in doing it, but the way it's been done rather suggests to me that the Americans just basically don't like it. China, I think, is going through the same thing, and I think the Chinese authorities would far rather people used gold, if you like, as an alternative to the yuan rather than Bitcoin. Now, having said that, Bitcoin seems to be, if you like, so immensely popular with the speculators. I think it's in a speculative bubble, and it could drive it quite a bit higher. This is the problem with speculative bubbles. Trying to call a top in it or trying to inject reason into the equation, you can just forget it. You just can't do it. But the idea that Bitcoin is money, I think it's got to be complete nonsense, because this is something which is far too volatile to be practical, really, as money. I know that lots of people wish it was money. They're looking for an alternative to fiat currencies, but and it's very cleverly constructed. I mean, the limitation, if you like, on the production of it, it just gets more and more expensive to mine, it seems. But really, I think that the only sound money, the only sound alternative to government fiat currency is, of course, gold, and in the past, silver as well. And silver, I'm sure, will come back as fiat currencies collapse, which I think is very much on the cards on, I don't know, anything between a 1 and a 5 year view.
And Jayant, your thoughts?
Well, Richard, Bitcoin, I love the technology. The problem with Bitcoin is it has no inherent value. So the pricing of Bitcoin is based on pure speculation and nothing else. I would be okay using Bitcoin, and I don't own any Bitcoin myself, but I would be okay using it for any immediate international transaction purposes, and then I would very quickly want to convert that money into gold or something else. But Bitcoin for me is not something that I would use to preserve my savings. The way for me is gold or silver or other investments, for the simple reason that Bitcoin does not have an inherent value, and it's backed by mostly, and probably all of it is backed by speculative pressures.
So the last question for today, what we can consider is what happens is in the event of a China credit bubble collapse, due to the large amount of debt there, 15 to 20% of GDP is non-performing loans. It has been estimated by Moody's. And then you have the situation, as you mentioned, Alasdair, in the U.S., if interest rates rise from Federal Reserve rate hikes up to 2% or so, that could also be very recessionary. So you might have a situation where there's strong deflationary forces globally if these events turn out. What would be the effect of that on commodity prices?
Well, I think that we tend to overemphasize the risk of a credit bubble collapse in China. And the reason for that is that the Chinese government own the banks. The Chinese government direct who survives from their malinvestments and who doesn't. So any collapse of that sort, I think, is just absorbed in the system. Eventually, of course, there is likely to be an effect on the purchasing power of the yuan, but I think that's probably a bit down the road. And that, again, is something that is probably managed fairly effectively by the People's Bank of China. This is a very, very different situation from in the West. If this had happened, if we had this sort of bubble in the West, we would all be running immensely scared. Okay. I mean, I am actually immensely scared about the West as it is, but I worry less about China because the Chinese, they run the economy like the sort of good old-fashioned mercantilists. And this is something I'm sure that Jayant will understand. It's rather like the way the East India Company used to run India. That's the way the Chinese run China now. I don't know if my analogy is correct. I'd be very interested in Jayant's opinion on that one.
Jayant?
Yeah, Richard, I'm extremely optimistic about China. I go to China almost every year, and it's a very productive economy, and these people don't waste their time on regulations or on transaction costs. The result is that despite the fact that it might have a lot of debt in that economy, the sheer fact that it's a very productive economy, in my view, makes it possible for China to go over these humps as time passes. So I'm not so worried about the debt level in China. I'm much more worried about debt levels in other countries.
Mm-hmm. Interesting. In terms of being able to know more about your work, gentlemen, how can our listeners know more? Is there like a website or an area where you write, Alasdair?
Yes, you'll find my articles on goldmoney.com, and I write 2 every week. On Thursday, sort of more or less midday Toronto time, we release an insight article, which is a weekly deal. And this week I'm writing about gold, so that'll be released later on tomorrow. And I also do a market report, which is released on Friday. Again, I suppose about late morning Toronto time. So goldmoney.com. And if you go under, hit the wealth button, it's all the research is under wealth.
Great. And Jayant?
Richard, everything that I do is on my website, which is jayantbhandari.com. And I particularly want to emphasize a series of articles I'm currently writing on India, the demonetization process, and how it is affecting the economy. And all those articles are not only linked on my website, but they go on the website of actingman.com.
Great. Thank you very much, gentlemen. A great insight discussion. We'll tune in for next week. Thank you.
Thank you.
Thank you very much.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.